morning, ladies and gentlemen. A very warm welcome to you on Market Today at Business Today Television. Let's start with this very good news on Thursday, which is also the weekly expiry of the Nifty. You are most likely to see a rate cut happening in September. This is what the US Federal Reserve and its Fed Chair, Mr. Jerome Powell, has said in his statement, which was at past midnight yesterday night. And because of that, you have a very smart rally happening on Wall Street. In fact, let's start with the Nasdaq this time. Nasdaq is up 2.5%. This is the most interest rate sensitive segment as far as the Wall Street is concerned, and therefore you have very strong rallies happening in frontline IT counters such as Nvidia up 12%, AMD up 4%, and of course Facebook, which is better known as Meta. Meta will rise again because earnings which were released post-market hours were fabulous. Now let's come back to our markets. The daily Nifty chart is right there in front of you, 24,951 for you. That was the close that happened on Wednesday. Now today is the weekly expiry of the Nifty, and given the strength that you are seeing on Wall Street, the rally that we've seen in the past 4 days will show its true colors today. Most likely you will get a close above 25,000 on the Nifty, and that is really good news. It's not as if that the Nifty has remained quiet over the last 4-5 trading sessions. In the past week, the index itself has added 2.2% or 540 points. It started Thursday at 24,410 and it's at the moment at 24,951. So a 540 point uptick on the Nifty. What's really happened in the past 3 or 4 trading sessions, ladies and gentlemen, is that while the gains have been on the positive side, it's the range that has narrowed. On last Friday, it was 450 points. It decreased half to 225, then it came down to 178, and yesterday's session had just 128 points between the high and low. That basically shows that the range is narrowing, and the index is now waiting for a suggestion from the markets either to move up or to move down. Now, because Wall Street has given a positive indication, there is most likely a gap up which is visible on the GAF Nifty and GIFT Nifty, and therefore you will see a very strong uptick happening in trade today. You are requested not to chase it. We'll give you better sessions to better levels to come back into it, but for the moment we are going to have a gap up start above 25,000 points. Let us see for the first 1 hour, 1.5, 2 hours whether the Nifty sustains above 25,000 points, and then take a call. Of course, if it dips towards 24,850, 24,900, 24,875, and God willing 24,800, that's the time to come back into the Nifty because the mojo is on the long side. So let's now look at the micro picture. We've seen the macro being good. As far as the micro is concerned, you see very strong earnings reaction coming on 3 counters: Bank of Baroda, Coal India, and Tata Steel. If you look at Coal India, the company reported a first quarter increase in net profit of 4% to 10,943 crores. The revenue rose 1.5%, and this counter is already at a record high. Tata Steel will be closely watched. The India business has shown a very strong traction. Profit after tax for the first quarter has surged 75% to 919 crores. Sales are down marginally by 8%, but the margin has improved dramatically. Bank of Baroda, a very strong set of numbers, 9.5% rise in profit to about 4,458 crores, and we've also seen a very smart improvement in net interest income. Net non-performing assets have slipped, although gross non-performing assets have upped marginally. So this is the broader structure that is the Nifty as far as markets are concerned. In terms of earnings, today you have 5 Nifty companies declaring numbers. They are Tata Motors, they are Sun Pharma, ITC, Adani Enterprises, and Adani Ports. What we'll do is each one of them, this is the Nifty set of 5 companies, and of course futures and options have 3 companies: Dabur, Escorts, and Aditya Birla Capital. Individually, let's take a look at what Tata Motors has done. Remember, in the dying moments of trade yesterday, you had Maruti coming up with a fantastic set of numbers, and you've seen a very strong show the market reacting very strongly to Maruti's numbers yesterday. But Tata Motors, if you look at the year-to-date performance, the counter is up 48%, 1156. Needless to say, this is a record high, so keep this in mind. We'll also look at Sun Pharma. The company declares its earnings. The counter is already buzzing with gains. As far as gains are concerned, for the year-to-date, Sun Pharma has shot up 36% to 1719 rupees. Needless to say, this is again at a record high. We've seen a very sharp momentum coming back into ITC. It's the FMCG leader. The counter was at about 505 until recently. ITC was also spared the sin tax increase in this budget, and the momentum is fairly sharp. The counter is up 7% at 495 over the past 7 days. Two underperformers, which is Adani Ports and Adani Enterprises, both of them are declaring their numbers today. And in that, you see Adani Enterprises over the last 2 or 3 days being very active, but on the year-to-date basis, it is up 11%, and Adani Ports is up 53%. So please keep all these numbers at the back of your mind when you're looking at data. So these are the 4 or 5 numbers that are coming in. I believe Sakshi has joined us. Good morning to you, Sakshi, and a very warm welcome. I believe the journey from the suburbs to Noida was a little painful because of yesterday's rain. A very warm welcome. And what is Wall Street, FI numbers and brokerage radar telling viewers today?
Very good morning to you, Shail, and good morning to all our viewers. Yes, it was, raining cats and dogs all across Delhi NCR last evening, and that led to a lot of havoc on the streets early morning. Roads were blocked because big and huge trees had blocked the entire road, so you had to take different routes. But yes, that was the morning haul. But then, of course, we, accept any blessings from the rain gods from the severe heat that Delhi NCR has been facing. So this is welcome. But let's go across to see how the Wall Street has given us the cues, because that is going to be a major trigger for the Indian markets today. Remember, the Wall Street and the US Federal Reserve particularly has possibly given what the street was really looking for. It has kept the interest rates steady, but Jerome Powell's speech, wherein he hints of a rate cut coming in September, which is on the table, he says, has provided some sort of a relief across the board on the Wall Street. You did see a flurry of green, especially in the Nasdaq, that rallied about 2.6% higher in trade. S&P 500 up 1.5%. In fact, it was the best day in trade for S&P 500 since February this year as well. The Dow Jones also managed to eke out about 0.2% kind of a gain on that front too. So that's going to be important as to whether the follow-through move continues over there. And of course, Asian markets also reacted positively, looking at the Wall Street too. We did see that Japan's Nikkei was not something that was in the green. That was in fact down 3.4%, but rest of the markets were still hovering higher. Kospi, Hang Seng, Shanghai, they were all up into the green. And even the GIFT Nifty trends are indicating a gap up start of to the tune of 50 odd points in trade today. So that's something that we will watch out for. As far as the US 10-year bond yield are concerned, they dipped to about 4.04%, the lowest level since January 2024. And among commodities, we did see that the gold futures rallied to a record $2,500 a mark, while the WTI crude oil futures jumped to near about $79 a level. So we'll continue to look at that front too. As far as the overseas investors are concerned, the FIs have remained net sellers for the third consecutive session. They sold stocks worth about 3,462 odd crore rupees in yesterday's trade. And on the contrary, we did see that the DIIs remained buyers for the sixth consecutive session. They bought stocks worth about 3,366 odd crore rupees in yesterday's trade as well. Let's look at the key stocks that we need to keep an eye out on. Some earnings reactions. Coal India reported a 4.2% growth this year in the net profit. That's tallied to 10,943 odd crore rupees. Revenue from operations rose by about 1.3% to 36,465 odd crores. We'll look at that one. Bank of Baroda has reported a 9.5% year-on-year surge in its net profit to 4,458 odd crore rupees. And this was largely in line with the expectations. that the street was having for Bank of Baroda. Maruti Suzuki, remember, this was the last number that we checked last afternoon when the numbers came in the dying minutes of trade. And of course, a stellar set of numbers, 47% of an uptick on the net profit. And we did see Maruti Suzuki surge towards that last minute, about 2 minutes, 2% odd or so. In fact, when we look at the kind of move that we have seen on even the revenue figure at the EBITDA figure, that's also pretty stellar for Maruti Suzuki, almost a 49% surge on the EBITDA front as well for the company. Now let's look at Tata Steel. It's reported a 51% jump year on year in its net profit to 959 odd crore rupees in Q1. This is as the operations in Netherlands have got back to normal operating levels. The total revenue on the consolidated basis was, however, down by 7.9% at 54,771 odd crores. Aster DM Healthcare, its net profit has soared 81% in Q1 to 81 crores. This was helped by higher occupancy due to the flu season. Excluding the gain of 5,148 crore rupees, however, from the sale of its Gulf business, the revenue from operations rose by about 19% to 1,002 odd crores. From the real estate pack, keep an eye out on Godrej Properties. Beating the street estimates, Godrej Properties posted over four-fold jump in net profit at 520 odd crore rupees in Q1 FY25, was the highest ever net profit for it. However, the company's revenue from operations fell by about 21% to 739 odd crores in Q1 FY25. Adani Power has actually posted a decline in its profit to the tune of 55% at 3,913 crores in the profitability figure. The revenues, however, went up by about 36% to 14,956 odd crore rupees in Q1 for the company. From the pharma space, I'm keeping an eye out on Mankind Pharma. It's recorded a profit growth of about 10% in Q1 at 536 odd crores. Revenues have come in higher by about 12 odd percent at 2,893 odd crores. Apart from this, we are also looking at Infosys. Remember, it's received a pre-show cause notice for alleged evasion of the GST tax amounting to 32,403 crores. And following this news, we did see the ADR of Infosys slip about 3.6%. So we'll see how the stock really reacts today. A number of brokerage houses reports are also coming in, but we'll also see whether we have our guest now with us. Yes. First, let's welcome our guest on board. We have with us Mr. Deven Choksi, the MD of Dr. DR Choksi Finserv. Warm welcome to you, sir, and thank you so much for taking the time out for this discussion. Let's start off by understanding from you, post the budget, how have you assessed the move of the markets, the way it has come back, leaving behind the dents of the higher taxes, etc. And we are again and again trying to inch towards higher milestones of 25,000. Do you think the pain is well settled, absorbed in the markets, and now we are only going to be looking up, especially now that we also have this favorable comment from the US Fed? The markets have nothing to worry?
Yeah, good morning, Sakshi. Well, I believe that one of the underlying factor, pre-budget and post-budget, has been the abundant amount of liquidity in the market. And given the fact that the mutual funds have been sitting on about 1 lakh 25,000 crore worth of liquidity, one obvious thing which came out post the taxation proposition in the budget, which are definitely negative, but I think one underlying narrative came out very clearly was that given the strength of liquidity in the market, this market will not probably go down in hurry. And at the same time, I think whatever the fall which is taking place in the market, that fall is largely going to be the stock specific fall and not across the market fall. I think that play is validated, that understanding is validated, and probably the market is exactly playing out the way this understanding was carried out. In my viewpoint, nothing changes fundamentally between yesterday to today. It remains absolutely very clear that the corporate sector is having higher amount of conviction for the growth in subsequent quarters. Yes, I think there will be a challenge as far as I think the investors, the fund managers, the analysts are concerned, that they may want to see the higher amount of growth reflected in the company's working. Given the kind of valuation at which I think most of the stocks are quoting, that would be their expectation. For a reason, if the companies don't perform in a period, in a given period, I believe that the market will probably, I think, rotate the stock, sell off, and get into some other. That process is going to continue. But across the board, any kind of a negative factor coming into the market, that's not immediately seen at this point of time. On the contrary, rate cut kind of a possibility in India. which might happen ahead of Fed cutting down the rate in September. I think we might see in August the announcement coming up, or maybe I think early September the announcement coming up from RBI. So that is where I think we are positioned at this point of time.
Good morning, Devan Bhai. A very warm welcome to you. And it's always a pleasure to host such wisdom and such experience on Market Today. You are very, very conscious of your health. I have seen you over the last 30 years, not even adding 30 grams to your body weight. You've made such excellent comments that rate cut in India can come in August ahead of the Federal Reserve rate cut. I wish I could have sent you ghee shakkar, which you will not consume, but I will send you a photograph of ghee shakkar for your records so that you feel happy about it. Now let's come
Thank
to
you, Shail.
earnings. Most of Nifty's earnings are out. Yesterday, post just at the nick of market close, we saw Maruti's numbers coming in, and they are fantastic. And this is against the backdrop that people were saying that people are not, analysts were saying that people are not buying entry level cars in Maruti, and Maruti is facing problems in its earlier models such as Zen, such as Wagoner. But the numbers have come up and they are dramatically better. How do you see and how do you analyze Maruti at current levels? Obviously at record high 13,100 or so. Where do you think this is headed?
Yeah, thank you, Shail, and thank you for all your warm greetings. Uh, well, I guess I think coming straight on to the Maruti, the company is basically interesting proposition. On one side, the volumes, but I think most importantly, company has started picking up on the margins, and that's not very surprising. Given the kind of blend of products that they have, particularly in the SU category products, where they are having relatively better realization and so the margin. I think that is basically contributing higher towards the growth in the EBITDA, which is far more superior compared to the growth in the revenue, as I see it. I think the fundamentals remains absolutely intact, and maybe the success formula with hybrid is now going to be accelerated to other models, and that's where probably I think you are likely to see the better margins coming up for the company. In my viewpoint, I think companies like Maruti, companies like Tata Motors, passenger vehicle particularly, they are demonstrating a significantly higher amount of I think abilities to not only meet the customer's demand but also I think produce better margins by way of strategically creating the high value added products. In my viewpoint, I think the entry level cars, I think that market will not dry away in a hurry. Also because of the fact that the first time buyers of the car, they certainly want, I think, the smaller vehicles, I think, to come to them. And India is a full of opportunity for such kind of first time buyers of car. So I think Maruti is very well positioned. They graduate the buyer from entry level, bring them to the mid level, and then probably I think take them to the higher levels. Is what I think the strategy of the company with the new models that they have brought out is playing out. So in my viewpoint, I think the company remains fundamentally strong, intact. Maybe, as I've always made a comment on this subject, that I think 15 to 20% on a year-over-year return is distinctly possible for a company like Maruti. And in a given situation, the market falls for some reason. I think that becomes an opportunity to buy to generate relatively higher amount of return from these stocks.
Right. Devin, sir, we also have some brokerage houses reports. So Jefferies has raised the target price for Maruti to 15,200 now post the earnings. And on M&M, CLSA has upgraded the stock to hold with the target price of 2,654. We've also seen Tata Motors rally a bit in the last few days, coming back out of a long-term consolidation. I wish to ask you, how does one really decide within these top 4-5 OEMs? How does one deploy fresh money, and where exactly? How should be the pecking order right there?
So on one side, I think the direction is very, very clear. In the passenger vehicle segment, one who is basically friendly to the customer's pocket is getting better amount of acceptance in the marketplace. So if you have seen, I think the hybrids portfolio of Maruti has actually, I think, played out well for them in this particular period, where they have successfully graduated their buyers into the efficient cars, I think, fuel efficient cars in the from their portfolio. Similar is the situation with Tata Motors with electric vehicle proliferation that they have succeeded with. I believe that I think this company is basically, I think, talking two good things. One, on one side, acceptance of their vehicle with a probably world-class designs that they have brought in. And on the other side, I think they are becoming more and more pocket friendly to the customer by way of bringing down the cost of the product, by way of bringing down the running costs, I think eventually. So all in all put together, I think these two companies, they remain absolutely in forefront when it comes to the passenger vehicle. The advantage Tata Motors have, and that is what I think we like, is about commercial vehicle. We believe that India's story, as far as I think the growth, will not be complete till the point of time. I think we see the successively higher amount of commercial vehicles flying on the road because of the better logistic management requirement by the industry. So, given the fact that higher infrastructure spending is happening, given the fact that industry is roaring, I would think that I think the commercial vehicle demand and for likes of Tata Motors, Ashok Leyland, I think would continue to remain, I think, on a significantly higher pitch. So from a perspective of looking at companies, we believe that I think when the direction is positive, don't immediately look at quarterly results. I think let the companies move in your portfolio in a systematic manner. We have been holding Tata Motors for almost now 8 to 9 years, and I guess I think in between we have seen ups and downs in the stock.
Yes.
But finally, when you see at the end of the 10th year, I think you'll find that I think you have actually grown your size, I think investment from what 120, 130 rupee kind of a stock price to about 1150, 1200 kind of a stock price. So which is 10 times, 11 times appreciation that we are getting. We have to be patient, I think, by staying in investment in this kind of companies for a longer period of time.
Right, and amongst those fortunate few who Devanbhai advised to get into Tata Motors via the DVR route was me. So it's a 10-12x bagger over the last decade or so, and it's worked wonderfully well. I believe the best is ahead of us rather than behind us. And Devan Bhai, thank you so much for that lovely advice. The long-term portfolio set up by Devan Bhai over the last 25-30 years is reaping compounded gains which are phenomenal. Devan Bhai, on the controversy that is there in the market, derivatives versus cash, options versus futures, where do you stand? You have over decades recommended that future should be converted to delivery, and that has happened. Now this SEBI's insistence on killing the market by removing weekly expiries and letting exchanges have just one instrument to trade for the month and for the week. How do you see this changing the landscape for brokers, and how do you see this impacting retail trade?
Yeah, Shail, I think probably you have seen, I think, at least last 2.5 decades of this journey of derivative markets already now. In my viewpoint, I think the bigger plot and the understanding on derivative market when they introduced in 2001 was to provide a significantly large amount of liquidity into our marketplace, and at the same time, I think allow the investors to hedge their portfolio from the derivative instruments. Now look at the later part. I think liquidity part, I think you have created significantly by way of adding the index options particularly. And I think you systematically brought in the speculation into the market. At the same time, as a regulator, you also allowed, I think, to the exchanges the weekly settlement of contracts. And on the top of it, I think 1 lakh rupee contract became 2 lakh contract, it became 10 lakh contract, and now we are talking about 20 lakh contract. Soon you would find that I think we will be probably heading into direction of 50 lakhs and 1 crore rupee worth of contract. I don't think that I think this is making any sense to anybody in this market. What you are trying to create a value is only for I think those participants I think who are having the larger ticket size to play and speculate in this market. This is fundamentally wrong. It's very categorically fundamentally wrong, I think, approach on the subject. In my viewpoint, I think suppose if you wanted to create the liquidity, you should have pegged the derivative trading to the underlying portfolio of investor. It will serve two purposes. On one side, if I have 100 rupee worth of portfolio and if I am allowed 50 rupee worth of derivative market exposure, then automatically I think I am taking care of market risk in a systematic manner. I think the regulator has lost the plot. They are not probably thinking in the direction at all. They need to think in the direction because that is where I think you are going to create the liquidity into the market in some other stocks as well. Second most important point, I guess I think the creating the market lot is a sign of inefficient market. You create market lot, you produce dabba trading. You create market lot. I think you shift the volume from derivative market to the underlying cash market in small cap and mid cap, where the liquidity is constant. People will play around and I think make some crazy valuation out of the stocks. I think this is not accepted as far as I think the understanding on the requirement of derivative market is concerned. Last most important point. Today, you are a $5.5 trillion market cap. Uh, Tomorrow, in 2035, you will be $12 trillion market cap or $15 trillion market cap. Are you going to be increasing the market lot size in this manner the way you are increasing it? I don't think that I think this is the solution. On the contrary, I would have imagined that the regulator would have come up with a product wherein the retail investor would have been allowed to participate through systematic and professional fund management companies for putting money into the derivative market, as against which I think they are allowing the direct participation and creating these kind of problems where the proliferation of dabba trading, etc., is also taking place. And I regret, I think I have taken longer time for I think explaining this particular subject, but some things are required to be put
No, no,
across in a forthright manner because I
not at
think
all.
it is for the health of our market.
Not at all, Devan Bhai. Your views are remarkable in their wisdom and, of course, in the absolute scathing point, which is absolutely correct that the regulator may have lost its way. But these are pendulum swings. I'm sure sense and sensibility will prevail. But the market salutes you. You have 25,000 on the board. Thank you, Devan Bhai. It's your luck that is rubbing off on Dalal Street. 118 points higher on the Nifty. Let's see the gains that are behind this. Top traded HDFC Bank 1.7% higher, 1643. Let's look at Reliance. Reliance is trading 0.5% higher, 3023. Tata Motors is 2% up ahead of its earnings, 1180. And I just want to see Infosys because of the pain that is there in the ADR, 2.3% lower, 1825. The government has sent a 32,000 crore GST evasion bill to Infosys. Let's see how it pans out during the day. But the stock, which is the fourth heaviest weighted counter on the Nifty, starts on a back foot. Let's look at ICICI Bank in the green, 1220. So it's a nice decent uptick on the Nifty. Apart from Infosys and Hindustan Unilever, all 10 index heavyweights are in the green and they are led by Tata Motors and thank God HDFC Bank. TCS is also up 1.2%, 4439. Now let's look at the most active list in the NSE 500 list. In terms of gainers, you have fluorochemicals 5.3% higher, 3558. You have Saregama 3.5% higher, 575. Maruti starts on a strong note, 3% higher, 13,500. Let's look at the top gainers list. You have a strong view coming into Vedant, 1.6% higher, and of course you have Trent, 2.7% higher. Coal India reacts positively to its earnings, 2.5% higher, 535. A strong move that is coming into Persistent Systems, 2.5% higher. Let's look at what Bank of Baroda is doing. The numbers were very, very strong, 1.75% higher. And let's look at Tata Steel. These are the numbers that have come post market and they have sort of added to the ongoing enthusiasm, 1.6% higher, 168. So the market, ladies and gentlemen, on its weekly expiry as far as the Nifty is concerned, moving higher, strong overseas cues coming in, 25,000 for you on the board. Devan Bhai, one very, very quick reaction to PSU banking stocks led by Bank of Baroda. How do you see them performing given the fact that we have a crisis in the making, deposits are not rising faster, and you have a high credit growth coming in, almost double digit?
Balance sheet will have to be strengthened, Shai, and I think the mechanism to collect higher amount of deposit, I think will have to be also be built up further. Unfortunately, I think most of the PSU banks, even after having strengthened the balance sheet by the government by infilling new capital, I think have still not been able to operationally scale up as much as I think they should have scaled up. Though I think they are far better in their performance, largely because of the fact that I think they have relatively less amount of NPS to talk about at this point of time. So they are relatively better off on that front. But to my mind, I think if you want to see yourself in a higher category, it is very, very clear, and I think the solution is on the cards. They will have to consolidate PSU banks into your numbers. Today, also, I think after the consolidation exercise number one that they created, I think they required to I think get into the second round of consolidation, wherein some of the mid-tier PSU banks I think are required to be I think brought in into the larger ones. Because as economy progress is bigger and we are making its size, in such situation you are likely to have more amount of I think lending institutions which are stronger and bigger. This entire game is getting big, is becoming bigger as far as I think the financial institutions are concerned. And that's where I believe that it is the right time for the government to, I think, bring in the consolidation, make few units, and allow, I think, these particular banks to even show far better performance than what they are currently showing at this point of time.
Devin sir, there's also this news that the government has now exempted state-run firms from meeting the public shareholding norms for another 2 years. That's the leeway that's now given to them. How do you expect the entire PSU pact to react now going forward from here? Is this going to be meaning fresh bout of supply? And how should investors be looking at this entire space that has been one of the outperforming spaces in the markets thus far?
So, two ways to look at this particular proposition. I think from the financial investor point of view and from a politician's point of view. From a financial investor's point of view, they've tasted the success of keeping the lower liquidity. And that's where probably I think they are happy with it. That I think in a given market where the funds are chasing their stocks, if you keep the liquidity lower, then probably I think you are basically re-rating all the PSU companies, I think to a level at which I think the valuation would be justified than what they were before. So from a financial investor point of view and government, I think they are doing a splendid job by controlling this particular policy mechanism. From the politician's point of view, the government in power's point of view, I guess I think they're preparing for 2029. Ahead of 2029, 2 years before 2029, they would probably start diluting public sector companies and start, I think, monetizing those companies because at that point of time, the financial balance sheets of the government of India will have to be even far more stronger than what probably it is. And that would be the requirement because if we are talking about 2047, which is 20 years from then, I believe that I think they would like to probably create a stronger balance sheet of the government. So, in a way, they are playing a businessman kind of an approach at this point of time. Though one can argue against that, I think you are playing around with the policies, but I think in a way, it's government. They are delivering the larger picture to the country. So I think they deserve it. Probably, I think I would say that.
907, ladies and gentlemen, thanks to Devin Bhai. We have 25,000 right on the board, and it's an iconic day. First day of the month as far as August is concerned, right in the middle of the half year. We have a very important level for the Nifty. Sakshi and you and I are going to remember this one, as also Devin Bhai. He can vouch for the fact that he will remember the first day of Nifty's trading. This was somewhere in 1994, 1993, if I'm not mistaken. And of course, he's also tracked the Sensex from 1000 points onwards. So, great day for us. And I'm sure there will be celebrations across the Bombay Stock Exchange and the National Stock Exchange today. Let's see how it pans out. But Bajaj Auto, let us see how the stock is reacting. 11% rise in monthly sales for the month of July to 3.54 lakh units. A nice strong uptick in the markets. Devin bhai, how are you deploying fresh capital in mid caps, small caps, and large caps? Most of the earnings session is through for the first quarter. What has caught your fancy?
So I guess I think given the situation that the crude oil prices are remaining subdued, and given the situation that because of the subdued crude oil prices, the derivatives of crude oil prices, crude oil is basically, I think, now showing the signs of stable pricing. And that basically benefits directly to the chemical companies, the specialty chemical companies, who are basically having the input in form of lower cost of raw material comparatively. If this particular cost of raw material, I think, remains steady to lower in next 3 to 5 quarters, then according to me, I think around 6 to 8 quarters from now, we are likely to see a significantly large amount of growth coming in the companies which are basically consumers of the derivatives of crude oil. And that's where probably I think you can put companies in the paint industry, companies in the agrochemical industries, companies in the specialty chemical industries. They are actually going to be the beneficiary of this particular cyclical benefit that they are getting into their portfolio of products. At the same time, many of the companies, particularly in the areas of the companies which are into specialty chemicals as well as in pharmaceutical chemicals also, particularly in pharma, I think where you are got the APIs and the CDMA contracts, those companies are likely to see relatively better growth program going forward. So that would include likes of DVs in the pharma or PI industries in agrochemical. They would probably, I think, be the kind of companies who would probably get the relatively higher amount of growth going forward. So yes, I think selectively we have chosen those companies. We are putting our capital into them. Do agree that some of the price appreciations have already happened, but this is typically a bull market. So in which I think you will not get anything which is completely bargained or completely discounted. You will have to possibly buy something at a premium and basically buy the quality, underlying quality into these companies. That's what I think we do at this point of time.
Okay. Now, Devin sir, do help us understand. We are bang in the middle of the earnings season. How has the season panned out for you? And where do you think, have you seen more surprises than disappointments this time around? And where exactly would you be looking to upgrade some of the stocks and sectors with the kind of numbers that have already poured in?
So with so much of analysts, I think working hard on to projecting the earnings of the company, I think good credit be given to those analysts. I think who have been in a position to, I think, bring out, I think, successful projections about the company's working. So by and large, I think whatever the numbers have come up, and I think the analysts' projections, I think in the previews have come up. I guess I think more or less the market has played out on a perfection note at this point of time between the prediction to the performance of the companies. So there are no negative surprises in a major way. Neither there are many negative surprises or positive surprises in the upside. Maybe I think exceptions on a given day like Maruti will definitely come where the margin improvement has been seen significantly larger than what probably one was asking for. So to a greater extent, I think the market is now into the into the zone where I think it is called as a price to perfection, which is continuing in this market. I believe that I think in this market, we are likely to see the rotation of stocks in a very successive manner, in a hurried manner, because most of the investors have started becoming or taking the advantage of the trading sentiments of the market. If the stock price matures ahead of time, then I think the investors, including seasoned investors, are not shying away from booking their profits, rotating these stocks, I think, from one to another. That is going on in this market. So yes, I think we'll have to wait and see. Only one thing which I am a little bit more careful about, and I think that is what I think I've been vocally suggesting also, that on one side, market is building very strong narratives and in turn give higher amount of valuation to stocks. On the other side, if the companies don't deliver the matching performance to the narratives that they have been set by the investors, then possibly I think those companies will fail in the marketplace for the investors who bought it at a higher price. That's a word of caution. I think that is something which you are going to have to follow. Otherwise, I think underlying strength in the market remains absolutely convincing, as I see.
That's absolutely fair, and the amount of fresh money coming in via the mutual fund route, via the EPFO route, ultra HNIs, and of course, normal retail investors buying outside the ambit of mutual funds is somewhere in the vicinity of 50 to 60,000 crore rupees bare minimum each month. And with that kind of liquidity, you basically don't argue on the long side. Devin bhai, defense and railway, how do you see them panning out? One or two stocks which are favorites for you in this space, defense and railways.
So maybe I think the large cap ones have actually, I think, been matured as far as I think the current prices are concerned. They are actually trading at a 2 years earning outlook from now on. So the likes of ABNZP, likes of Siemens, I think they are already probably, I think, at a territory where I think the stocks are adequately priced. But maybe when you start looking at the companies which are on the sidelines, which are possibly, I think, the ancillary companies to those companies, I think you will figure out the names like DCX, or you will figure out the names like HFCL, or even I think some other companies in this particular space, which are also into the embedded products. I think which are basically driven by the chips, and at the same time, I think their software. So to a greater extent, engineering R&D kind of businesses are also taking a good amount of inclusion of this business into their portfolio. I would think that I think instead of I think just simply looking at railways and
Okay.
defense, start looking at the companies which are basically I think supplying the technology into this entire space. That is where probably I think you will figure out at least some good names getting into your portfolio. They are tough, I agree, for a common investor, but at the same time, I think it requires more amount of detailed insight into the subject and study on the subject. So we look at some of these companies, including I think those companies like say for example they are expensively priced. It is only for namesake that I'm making a reference at this point of time. Say for example, companies like Azad Engineering, an excellent company in the engineering space. Of course, I think everything is in price. At least for next 2 years, I think they are fully traded at this point of time. But if market gives an opportunity at a corrected level, such kind of businesses are worth owning into the portfolio because they are also supplying to the extended segment of defense eventually.
Right, sir.
So that is where probably I think we like such kind of stories, but we'll have to wait for buying them into the portfolio when the market gives an opportunity at a lower price.
Right, ladies and gentlemen, congratulations to all around. We start Nifty above 25,000. So this is a major change as far as how retail investors and how foreign institutional investors will be watching the market now. This is a milestone that has happened, and it has happened with extreme pace, with extreme forethought, and of course a lot of liquidity and a lot of participation from all around. 95 points higher, 25,047. Again, congratulations to everybody. All 10 index heavyweights are in the green, led by Tata Motors, 1.6% higher, 1175. Let's look at how HDFC Bank is doing, 5 rupees 70 higher, 1621. Let's look at Reliance, 11.75 higher, 3021, and ICICI Bank. These are the four top weighted counters, 1218, 3.75 higher. What's in pain? Infosys, and nothing to be worried about, just 0.8% lower at 1852. Very quickly, we'll go into the NSE 500 space. Maruti Suzuki amongst the top gainers, 3.3% higher, a very strong reaction coming to earnings, 13,552. Let's look at what Tata Steel is doing. This is something that has to be watched. 167.21, 1.1% higher. The domestic business of Tata Steel has performed excellently, and its overseas operations in Netherlands have also shown a bit of improvement. We'll shift immediately to the Nifty PSU banking basket and look at what Bank of Baroda is doing at this point of time. Remember, the earnings were stunning, flat 253. Let's look at the NSE FNO space and look out for winners and losers at the moment, led by Maruti, 3.5% higher. Coal India, stunning set of numbers, 1.7% higher, 531. This is to say it's a record high. At this moment, you have a record high on ONGC, 338.7, TVS Motors, Glenmark, and of course SBI Life within the FNO space. Sakshi, what are you watching? A fine day. I'm sure you'll remember 1st August as the time when the Nifty traded above 25,000, and let's hope it closes above that. Today's the weekly expiry too.
Yes, it's a stunning day. In fact, the journey for Nifty from 24,000 to 25,000 has taken 47 sessions, and it's the third fastest ever for the Nifty to climb these 1,000 points as well. In fact, the Sensex has now hit a record high above 82,000 for the first time as far as the Sensex is concerned as well. It's crossed that another milestone. So both the benchmark indices have crossed milestone levels in trade today. 25,000 for the Nifty, 82,000 for the Sensex as well. Mid cap index is at a lifetime high. 59,200 for this one as well. Across the board, there is sharp momentum within the markets, especially the metal stocks that began their rally yesterday are continuing with their sharp move. Stocks like Tata Steel, Vedanta, JSW Steel, JSPL. These are the kind of stocks that are buzzing in trade. Hindustan Copper. These are the stocks that are all up by about 2.5% odd. The oil and gas names like Oil India, they're also rallying in trade, 3.5% higher in trade for this one, with the kind of move that we are seeing. ONGC is up by 1.3% odd as well. So again, the commodity stocks, these are actually taking the limelight. Metals on the one side, energy basket on the other. What else is ticking higher? Zomato is up 1.7% higher, 233 odd levels. That's the one that's also moving up in trade today. Then let's also look at some of the other stocks that are buzzing. IndusInd Bank is buzzing in trade, higher in trade right now. In fact, I'll just like to correct myself. I think Nifty has taken just 24 sessions to rally this 1,000 points. So this is the third fastest ever that we have actually seen for the markets. A stellar set of running within the markets. Now, if you look at the kind of Nifty milestones that we have, 25,000 is something that has come in today on August 1st, 2024. Before that, if you look at 20,000, that happened in September 11, 2023. So that 5,000 point journey has happened from September 11, 2023 to August 1st, 2024. 15,000 as a milestone, if you look, that was in the year 2021 on February 3rd for the Nifty. We'd actually seen the Nifty from 15,000 to 25,000 from 2021 to 2024. That's the kind of sharp rally that we have seen within the markets of late. And of course, the Nifty had touched a 10,000 milestone in the year 2017. So that's the kind of journey that you can actually see that the Nifty has climbed over all this while as well. A stunning set of rally. Let's welcome our other guest also now on the show. We have Mr. Rajesh Palvia now joining in. He's the head of technicals and derivatives at Axis Securities. Warm welcome to you, Rajesh ji. And Record High greets you. Congratulations to you right here. Do tell us, where do you see the Nifty headed now that we already have that 25,000 mark, and we are now keeping a long-term target of 1 lakh on the Nifty now?
Good morning, Sakshi. Good morning, Shailji. Good morning, everyone. So yes, again, it's a congratulations to all investors, those who have has shown the confidence on Indian growth story and remain invested in the market. I think they are getting the benefit of this confidence and they are creating wealth. And now we are at the 25,000. This is the another milestone for the Nifty. So I think this really can extend because the way market has recovered from the budget day low of 24,000 and almost in 7-8 days trading days, we have reached to the 1,000 point kind of really in a very short span of time from that budget day low. In this rally, most of the mid cap, small cap also participated. So I think this is the broader market has shown good confidence. And again, the renewed buying action post budget we have already witnessed in the market. And I think this really may extend further. Though we have today weekly expiry for Nifty and most of the call put concentration is having at 25,000 now. So I think we have to see how this 25,000 is now defended by the bull throughout the day. If we able to hold out about 25,000 level during the day, I think this really may extend to 25,300 also in the next couple of days also. So because the short covering may trigger if we hold another 10-15 minutes about 25,000 level. So there would be short covering in Nifty and then possible target and really can extend. Again, the bank Nifty is also now trading near to very interesting juncture. 51,800, 52,000 is the immediate supply zone for the bank Nifty. If we able to take out about 52,000 mark, I think then this would also, contribute to this upward momentum, and then Bank Nifty may also show some, short covering action, and possible target for Bank Nifty we could see towards 52,500. So I think one should remain on the long side of trade. Minor dip should be used as a buying opportunity in the market. There is optimism on the market. There is no as such negativity in terms of corporate earnings also. So I think everything seems to be on the bullish side, and I think one can hold the position. Trailing stop loss for Nifty now, 24,900 till we are holding about 24,900. I think trader may also hold their long position.
Right, ladies and gentlemen, let's take a detour in the broader markets. The Nifty is consolidating above 25,000 on its weekly expiry day. Remember, this is the fifth straight day of gains. In this week itself, Nifty has added somewhere like 2.7% or almost 640 points since its last Wednesday close. With that background in mind, it's a sea of green across the board. Business Today tracks 19 indices for you. All 19 of them are in the green. At the moment, the advanced decline is distinctly in favor of the bulls. 1500 shares in the green, 583 in the red. What's ticking and ticking very strongly is Maruti. A very quick view coming in from Rajesh Ji. Strong set of numbers, Rajesh Ji. Maruti, it came at 329 yesterday. What are the charts telling you at this record high level? Would you want to suggest an options trade?
So definitely very strong breakout on the Maruti. Now stock at all-time high. It's a sector leader. It's having the major market share in terms of the vehicles in the car segment. So I think Maruti may continue furthermore upside. The way stock has reacted post earning, I think there is a still possibility that that stock may attempt to move further higher to 14,000 mark also. So I think yes, one can look to buy this stock, though it's a gap up opening, and now short covering is also visible in the stock. Those who have already short around 13,500 strike call option, so they are covering their position. I think I would suggest to buy 13,500 call option, which is now trading at around 325 rupees. Keep your stop loss around 270 rupees, and possible target for this call option we can see towards 380 to 415 kind of level. So those who wants to make trade for intraday perspective, they can look for 13,500 call option.
Okay, got that.
Fine. A very smart rally across the board. Yes, Sakshi, continue.
Yes, strong rally across the board, Shail, and in fact, Maruti Suzuki is something that's been giving us a stellar set of numbers. There are several stocks that are at an all-time high, Maruti being one, Coal India being the second one. We have ONGC that is at a record high. We have NTPC that is at a record high. And we also have SBI Life at a record high as well. Autos, energy, insurance basket, all of them in the buzz. Where do you see some of these stocks heading even higher, Rajesh?
I think Coal India, as you pointed out, I think this stock has potential to move further higher on a positional perspective. We expect that this stock can continue upward momentum. 580 to 600 would be the next target for Coal India. So I think yes, one can hold on the position in Coal India at this juncture. Even in the minor decline, one can add the position. So on a long-term chart, stock is looking bullish. A series of higher top, higher bottom formation is already there. Stock have managed to view breakout on the long-term, monthly, week, yearly chart. So I think these stock can continue further more upside. So one can hold on the position with revised stop loss or trailing stop loss of 515. Another stock I believe one can look to buy is ONGC. That stock is also
Yeah.
showing good strength. Very long-term chart is long-term chart managed to view breakout. So I think these kind of breakout may take stock further higher. So ONGC is another stock where we are focusing for positional perspective. Our target for ONGC is 380 to 400 on a positional perspective. So I think buy on dip should be a strategy till stock is holding about 305. Any minor dip should be used as a buying opportunity in ONGC. So I think this stock can also exhibit good amount of rally in coming weeks.
Yes, soil exploration companies, upstream companies, they are actually sharply higher. Both ONGC, Oil India, and now you also have Ceylon Exploration, about 18.5% higher in trade. That is the kind of strong surge that we've actually seen on Ceylon Exploration today. It's the top mover within the broadest markets among the kind of momentum stocks that we are looking at. What else is moving within this broadest index? You have Shivam Autotech, that's up 14%. You have Sapphire Foods, that's rallying about over 8% higher in trade. You have Greenply Industries, that's up 8%. Then you also have IFB Industries, that's up 7.5%. Sudarshan Chemicals is up 7%. Pre-call is moving up 6.5% in trade. 361 WAM continues its strong momentum even today, about 6.5% higher in trade today. Bansal Wires, a recently listed stock, that's up 6%. LG Equipments is up 5.5%. Shakti Pumps, Landmark Properties, those are the kind of names that are actually rallying in trade within the broadest markets. What takes your attention, Rajesh, here?
I think lot many stocks. I think you have pointed out. I think
Yeah,
it's a broader rally. I think mid
yeah.
cap, small cap, everywhere. We are seeing good traction. LG equipment, very strong buying action. We are seeing. So I think here also one can hold the long position. I think there is a renewed buying action and renewed confidence has been there in the market. The way market is comfortably holding about 25,000 mark. I think. These mid cap, small cap stocks may outperform. LG equipment may has potential to continue furthermore upside to 770 to 780. I think those who have already bought or willing to buy the stock at current market price can initiate long position with stop loss of 705. So I think mid cap space is also looking very attractive, and so many stocks are there which showing good traction. So I think one can hold on the position. Even we are seeing some of the stocks from the metal space also. Energy India is also looking promising. Some of the chemical space which is also showing good traction. So I think these are the pocket where there is still risk to reward is in favor of traders as well as to our short term investor. So I think chemical is one basket where one can find out some opportunity, and metal, this is another space which has shown good uptick in today's session. So I think metal is also giving you good risk to reward in your favor. So here also you can focus on some of the stocks like Vedanta, NLC India, even Sale is also looking promising from that space.
Absolutely. National Aluminium in the futures is up 1.8%. Hindalco is something to be watched at, 2% higher, 685. NMDC, Hind Copper, Vedant and JSW Steel. In the top 10 futures, you have about 5 of them dominated by metal or metal related counters, and this is paying off handsomely. Let's look at in terms of open interest analysis, where do we see long build up at the moment? So it's Bank of Baroda. Futures are at 257, 0.5% higher. The change in OI is 2.5%. Rajesh ji, because the earnings are already out of the way and they are very good, would you want to analyze the Bank of Baroda chart?
So Shalji, see, most of the PSU banks are consolidating. Even if you look at the other stocks also from the PSU banking basket, SBI, Canara Bank, all are consolidating since last couple of days. Bank of Baroda is on a verge of giving breakout to its falling trend line on a daily chart. So 258 to 260 is the immediate level where one can keep eye. If stock at all crosses about 260, then there would be a breakout on the near-term chart, and then stock may attempt to move further higher to 270 to 275 level also. So I think those who can buy at current level with the stop loss of 250, 250 would be the stop loss. Either you wait for breakout about 260, or if you're buying at current level, your stop loss should be at 250, and then possible target we can aim around 270 to 275.
Okay. The Adani group is in thick trade, and remember, two companies, Adani Ports and Adani Enterprises. One of them is, of course, a part of the Nifty as well. Will be declaring earnings. Adani Ports 1.3% higher at 1590. Adani Energy Solutions 4.5% higher, 1192. And of course, Adani Enterprises is flat, 3116. Let's analyze Adani Ports ahead of earnings, 1.4% higher, 1592. Remember, none of the Adani Group stocks have been able to breach the June 4th high that they had seen on pre-election counting, and that's a worrisome point because the markets from those level, on a broader basis, the Nifty alone has gone up by about 7-8%. Rajesh ji, Adani Ports for you, what do the charts say?
So this is the only stock which is now again approaching to all-time high trajectory from Adani Group. I think there is a potential to continue upward momentum. Very stable structure across all time frame for Adani Port. We believe till the stock is holding above 1540, 1550 mark on a near-term chart. I think there is a potential to continue upward momentum. Possible target we can see towards 1650 to 1680 also for Adani Port. So I think one can initiate long position at current level also with stop loss of 1550. Possible target in next couple of days we can see towards 1650 to 1680.
Okay. Rajesh, the other space, auto space entirely, how are you looking at it? Apart from Maruti Suzuki, Bajaj Auto came with its numbers as well. Tata Motors has been in the thickest of action. M&M came out with its numbers yesterday too. Within the entire auto space, where do you see there is enough and more momentum could be seen from here on beyond Maruti Suzuki now?
Yeah, definitely. So we already discussed about Maruti. Now, next stock which we like from automobile, that is Tata Motor. That stock is also enjoying at all-time high trajectory. The way stock managed to give breakout of almost 10 to 12 week consolidation, and the follow-up buying is still there in the stock. We believe that there is a potential to continue really 1200 to 1240 would be the next target for Tata Motor. So I think those who have already bought the stock or wants to trade in this stock can initiate long position with stop loss of 1130. Another stock that we like from automobile space, that is Ashok Leyland. Again, there is a strong breakout on the chart. Almost stock is trading near to its all-time high trajectory, though there is some profit taking in today's session, but we still believe that the way stock is holding about 245 248 zone, there is a possibility that stock can continue furthermore upside, and possible target we are projecting towards 270 to 280 for Ashok Leyland. So here also one can deploy some long trade and accumulate this stock. So if we analyze the whole automobile, that whole automobile index is looking bullish, and we believe that stock like Bajaj Auto may also exhibit good amount of rally in near term basis. Once the stock crosses about 9800 mark, I think here is a potential to move into the 5 digit 10,000 to 10,200 would be the next target for the stock on a positional perspective. So Bajaj Auto is also looking promising at this juncture. Can buy and accumulate this stock with stop loss of 9600.
Okay, got it. Another space what warrants your attention, Rajesh, is the entire insurance space. Today again we are seeing SBI Life at record high, HDFC Life is moving, ICICI Lombard, even LIC is on the move at 1185 odd levels. How are you looking at this entire space, and which stock remains your favorite?
Yeah, definitely. So insurance is a space where a lot of stocks have shown good traction in last couple of week, and I think from that space, LIC is our preferred choice at this moment. Life Insurance Corporation, the way stock managed to give breakout of rounding bottom formation on a weekly chart, we believe that here is a potential to continue upward momentum. 1250 to 1280 would be the next target for LIC on a positional basis. So I think one can buy and accumulate this stock with stop loss of 1150. Another stock that we like from the life insurance space, that is HDFC Life. Here also there is a breakout on a long term chart, and the way stock is now trading above 700 mark, we believe that HDFC Life can also continue furthermore upside to 760 to 780 on a positional perspective. So one can initiate some long trade in HDFC Life also with stop loss of 690. And other stock, as you discussed about from the general insurance space, So I think New India Insurance is also looking promising at this moment. I think the New India Insurance is trading around. It's yeah, so it's trading around 300 mark. I think once the stock crosses about 300 level, here is also potential target we can see towards 330 to 340. So New India Insurance can be looked at to buy with stop loss of 385.
Right, ladies and gentlemen, 9:40 almost. We've had the first 15, 20, 25 minutes of trade on weekly expiry day. Record highs, not only record highs, but a major change in digit. Above 25,000 is where you see the Nifty, and it's trying to break past 2550, which is a major 25,050, which is a major put writing area. Once that is gone, then obviously you will see a lot of effort coming in. Remember, over the last 4 sessions, the Nifty has made repeated efforts to go above 25,000, but only to be met by option selling. Let's see how the day pans out as far as the weekly expiry is concerned. But across the board, very strong momentum coming in. Sakshi, I'll be watching Adani Ports for just one reason. The all-time high is 1625. The counters already crossed 1600, and of course we have this earnings coming in today. Look at the volume picture as far as the prices are concerned within the NSE 500. There is a fairly strong traction in terms of volume. The most traded counter at the moment is Maruti, 2.5% higher. 750 crores worth of transactions done. It's only earnings led. Then you have Coal India, and you have another Adani Energy Solutions. I'll take Rajesh Bhai's views on Adani Energy Solutions. Remember, this is the QIP baby from the Adani group. Let's just first get a technical view in. 4% higher, 1188. Rajesh ji.
So I think Shalji, after a long consolidation, now this stock is ready to give breakout of this consolidation. I believe that the way stock is consolidated for almost 8 to 10 months in a range only. There is a possibility that stock may give attempt to give breakout about 1200 to 1210 level. Once this stock crosses about 1210, I think there would be another round of rally we can see towards 1350 to 1400 on a positional perspective. So I think this stock is looking promising. Already consolidation is already done for 7-8 months, and we believe that once this stock crosses 1210, then there would be a sharp rally on the higher side. At this juncture, we would advise to hold long position or can initiate long position if you get any minor dip with stop loss of 1150.
Right, the all-time high on Adani Energy Solutions is 4021, ladies and gentlemen. Its most recent QIP of 6,000 crore rupees was oversubscribed by 5 times. So keep an eye out on this one. Usually what you see is that stocks that have corrected about 80-85% from their all-time peak generally make a very strong comeback. And as Rajesh ji has said very clearly, for the last 6 months the counter is trying to consolidate. On December 23, 6th of January, 6th of December, the price was somewhere like 1246. Then on 3rd of January, you had again 1250. It tried to overcome that level on 3rd of June. Again, nothing happened. And now, after a series of very positive news, you have Adani Energy Solutions trying to break past its 6.5% kind of a move that we have seen. Okay, now what else is clicking? Nothing to be worried about on Infosys, ladies and gentlemen. Look at the day's low as far as Infosys is concerned, and that day's low is 1 second about 1845. From 1845 the counter has moved to 1863 on the series of very bad news coming in from the government side. Although Infosys has said that it has paid all its dues, but its ADR was down to 2.5% on the New York Stock Exchange, and that is what is getting reflected. But buying support coming in. Taking it away is Tata Power, record high 458. This is 1% higher. Rajesh, your views on Tata Power?
So again, Shelji, stock was consolidating since last 3 4 months, and now again, stock is resuming its all-time high trajectory. So I think there is a possibility that this stock can exhibit good amount of really rollover action. Was again attractive on the long side for Tata Power in this series, and we believe that the way stock is inching up to its all-time high trajectory, this stock can exhibit upward momentum to 480 to 495 in short period of time. So I think one can hold the position in Tata Power at this juncture with stop loss of 448.
Okay, Rajesh ji, will get your attention on Paytm now. A strong surge can be seen on Paytm, over 4% uptick right now, and the stock is moved to the high point already at 514 odd levels. Last 5 days, the stock has moved 10.5%. In the last 1 month alone, a 24% surge has actually come in. So it's finally coming out of those blues of the Paytm's Payments Bank pain that it had been facing. Your sense on Paytm, does it give you enough strength on the charts to be taken fresh trade now?
So Sakshi, yes, stock is moving in upsloping channel on weekly chart. Gradually, stock is moved up and now it's holding above 500 level. The way near-term charts are now shaped up, stock is now trading about to 20-day moving average. So I think there is a potential to continue furthermore upside as the near-term indicators are also in positive side. Though long-term structure is still not improved, but yes, for near-term we can see a rally towards 550, 560 kind of level. So I think those who have already in long side of trade can hold the position with the stop loss of 495.
Okay, got it. Apart from this, I also wanted to take your view on ITC. Earnings will come in, and the stock has been in momentum over the last 1 week, 10 days odd. Where do you see ITC really headed? 493 currently?
So I think we are holding our bullish view on ITC. The way stock is trading about to its near term breakout, short term breakout level. I think till stock is holding above 480 kind of level on a weekly closing basis. There is a possibility that this stock can extend its gain. 520 to 530 would be the next target for ITC. So I think one can hold the position with stop loss of 480.
Okay.
946, ladies and gentlemen. All-time favorites are coming back, Sakshi. At 25,000, the market needs fresh color, and the color is coming via Asian Paints. 3,100 for you. When was the last time we saw 3,100 on Asian Paints? It was 6 months ago, ladies and gentlemen. This is a very, very nice breakout. I am sure Rajesh ji is going to love it. It's broken past 200-day moving average over the last 2 or 3 trading sessions, and this was last seen on January of 2024. Remember, the all-time high on Asian Paints is 35.47. Lots of pain in the paint market, but that's how the story is. We'll wait for this one to retest its 200 DA DMA, but nevertheless, Rajesh ji, medium term charts of Asian Paints, what are they telling you?
Definitely. So, a strong comeback by the stock after a long underperformance. It's a darling stock for long-term portfolios investors, because this stock have created a wealth for long-term investor in last couple of decades. So I think again stock managed to give breakout on the near-term, short-term consolidation, and the way stock is now trading around 3,100. So I think yes, there is a possibility that this stock can continue furthermore upside. Most of the paint stocks have shown good buying interest in last couple of days. We have already initiated long trade on Asian Paint to our client also, and we are projecting target towards 32.40 to 32.60 for short term trading point of view. one can keep a stop loss of 3065 to hold long position in Asian Paint.
Okay. Right. Well, apart from this, Rajesh ji, one interesting trend that I was trying to figure out in the last few trading sessions, the RPSG group companies, they are all rallying in trade. It was CESC that started the move, went on to PCBL. Early in the morning, it was Saregama. Now it's Firstsource Solutions. Of course, that also is amidst the earnings move. But the entire space within the RPSG group, all the stocks that are listed are actually showing us some momentum on the higher side. Is anything looking interesting within the RPSG pack?
So definitely, CSC, PCBL, FSL, these three stocks are looking promising from this pack, and we believe that CSC, the way stock managed to give breakout of long-term chart, I think there is a potential of further more upside. 190 to 200 would be the next target for CSC. Keep stop loss of 165. PCBL, I think sector tailwind is also in favor of this stock, and I think the way PCBL is trading about to 315 mark, I think there is a possibility to continue upward momentum. 360 would be the next target for on the short term perspective. Keep your stop loss around to 325. And the third stock we like from that group is FSL. First source is also looking promising. Stock has already managed to give breakout. Stock is trading at all-time high trajectory. We believe that this continuity of uptrend would be there. 330 to 340 would be the next target. I think one can hold the position with stop loss of 285.
Okay, got that. Let's also get your view on the consumer durable space also, Rajesh ji, something that has been on the move over the last few trading sessions. Stocks like Crompton Greaves Consumer are rallying today about 3.3% higher. Blue Star, Voltas. What really looks good to you within the entire consumer durable space? Is this a space that shows you strength enough?
I think Voltas and Crompton, these two stocks are looking very strong on a technical front, and the way these two stocks are shaping up on a technical front on a near-term, short-term structure, we believe that Voltas has potential to continue. 1600 would be the next target on a positional perspective. So I think this stock can be looked at to buy with stop loss of 1510. The second stock Crompton is also looking promising. Uh, there is a strength on a near term short term structure, and we believe that again stock may attempt to move to its all time high trajectory, which was at around 505 to 510 zone. So I think one can hold on the position, and possible rally can extend to all time high trajectory, previous all time high trajectory of 510. So Crompton is also buy with stop loss of 450. And the third stock that we like is Symphony, is also one can keep on their radar. If we analyze on a daily as well as on the weekly chart, the stock is on a verge of giving breakout of its consolidation range. I think if Symphony manages to cross about 1230, 1240 zone, there would be a rally towards 1350. So Symphony can be looked at to buy with stop loss of 1170.
Insurance plays, ladies and gentlemen, let's look at the entire sector. You have a record high in SBI Life. Both the insurance plays from the ICICI group, which is ICICI General Insurance and ICICI Pru Life, are showing strength. The three public sector insurers, LIC is at a record high. Strong moves coming into GIC Ray, and of course National India Assurance, NIACL. HDFC Life is buzzing with gains, and there is this tailwind, which is that a very senior cabinet minister, Mr. Gadkari, has written to the finance minister, Srimati Nirmala Sitharaman, saying that the 18% GST on insurance policies in the health and life sector should possibly be taken away. It's a cost on life. Let's see what happens, but a very, very strong tailwind coming in. Rajesh ji, you've mentioned your choices NIACL and LIC, but among the private insurers, which have been long-term wealth destroyers. Anything that catches your fancy on the chart? What looks good?
So I think two stocks where we are focusing from the private, that is HDFC Life is one stock. Again, I think the way stock has moved up in last couple of months, I think there is a potential to cross its previous swing high trajectory also. So we are projecting initial target of 760 to 770, which is the previous all-time high for the stock. I think this stock can continue, and maybe stock may attempt to give breakout above its previous all-time high zone also. So HDFC Life can be looked at to buy with stop loss of 705, and ICICI Prudential. This stock is also looking promising. Already breakout is there on a near-term, short-term chart. I think this stock may also continue furthermore upside to 780 to 800 kind of zone. So ICICI Pru can be hold with stop loss of 720.
Okay, let's look at the Nifty. We are at 954 now. Time to sort of wrap the show up. Day's low almost 25,031. Remember, it's testing the 25,000 barrier on its weekly expiry day. The index itself had opened with a gap up at about 25,011. Yesterday's close was 24,985. So this is a 30-40 point gap which needs to ideally be filled before the journey can resume on its way up. The first half an hour of trade has been phenomenal, ladies and gentlemen. It's a fabulous day for Indian equities. The Nifty has hit a milestone of 25,000 points, and that's primarily on the backup of counters such as Maruti, strong earnings show, fresh record high, 3.5% higher, 16 points contributed towards the green. Reliance sticking in the green, 0.5% higher. HDFC Bank 0.6% higher. Coal India again earnings led 2.9% higher, and of course Power Grid, whose earnings came earlier this week, is also contributing in the green side. What's pulling the Nifty lower? Nothing to be worried about. Infosys 0.5% lower because of its tryst with the GST department. M&M strong earnings, a bit of profit booking, nothing to be worried about. 1.2% lower. Sun Pharma and ITC ahead of their first quarter earnings today are mildly in the red, and Kotak 0.5% lower. This is how it is, ladies and gentlemen. Sakshi, to you. And before we wrap up, let me just point out something interesting on the Sensex, which is also at a record high, 82,000. I just want to see when it hit 25,000. This was somewhere in August of 2014. So in 10 years, the Sensex has appreciated from 25,000 to 82,000. I'll find out the CAGR for you, but let's hope something better for the next Nifty over the next 10 years. Sakshi.
Right, got it. Let's also look at some of the F&O gainers at this point in time as well. We have Nippon Life India, that's up by 3.6%. Coal India, Crompton Greaves Consumer, that's also up by about 3% and then you have Nalco, Power Grid, NMDC. These are the stocks that are actually buzzing in trade. But of course, the thickest of the thickest action is with the Maruti Suzuki, Coal India, Bank of Baroda after the earnings move that has actually come in on the markets right now. Let's look at the kind of move that we are seeing. Of course, Sensex has slipped below that 82,000 mark. It's still holding on to 223 points of gains, about a 0.3% of an uptick that you can actually see on the Sensex. Even the Nifty Bank, if you look at, is up by about 0.3% at 51,718 right now. That's the kind of move that we are looking at. In fact, on the mid-cap 100 index also, there's a 0.3% of a surge. It's hovering around that all-time high level that it had hit. We also have some more movers that are coming in. Let's look at the sectoral action to see how the sectors are participating as of now. So apart from, I think, softness in the IT space, rest of all of the sectors are up and about. Consumer durables up by 0.6%, oil and gas up 0.7%. Metals are definitely shining the brightest, 1.3% higher in trade. Nifty Bank are now up 0.4%, autos up 0.9% as well. So across the board, there is a very sharp move that you can actually see within the market space. Even in the broadest index, we have named a whole host of names that were up and about. Nifty Next 50 also showing Adani Group stocks as marked by Shell. Insurance space, as all of us have marked already. Then you have Zomato, TVS Motors, Cholamandalam Investment, Tata Power, Torrent Power, Pharmaceuticals. Dabur is buzzing in trade, about 1% higher in trade today. And then you have some of the other stocks. Geo Financial Services is also up and about in trade. Some railway stocks like IRFC are also buzzing, whereas some shipping stocks like Cochin Shipyard are also buzzing in trade and continuing that upward momentum right now. Then we'll thank you, Rajesh, for being with us on this very special edition and sharing all those thoughts and ideas, and we'll wrap it up at that note. Right here on Market Today on Business Today Television, the morning edition. Many thanks, viewers, for being with us, and meanwhile continue to celebrate as the Nifty has hit that milestone level 25,000 for the very first time on August 1st, as we will continue to remember this date, as Shail has pointed out. Many thanks and goodbye from both Shail and me for now, but we'll continue to come back on the screens for you with several interesting conversations through the course of the day. Stay tuned.
Good afternoon, ladies and gentlemen. Welcome back to Business Today Television. In our ongoing series of tracking first quarter earnings, we are now joined by the management of Vari Renewable Technologies, the CFO, Mr. Dilip